Hi everybody, Frank Finance here. Hope you're having a wonderful day. So recently a viewer asked the question, what is the event that caused you to think that Alibaba could go down to $190 a share? And it got me thinking, it's not really one event, more like the series of events. And it made me start to think of what were all the things that led up to Alibaba dropping 60% for a little bit over a year now. So in this video, I'm going to give a detailed timeline of all the bad things that happened to Alibaba over the last year. And retrospectively, I was like, dang, man, that's crazy to think about if you just got it all and said, all this is going to happen to Alibaba. I probably wouldn't have believed you, but looking at it now, yeah, well, it has. All right, so jumping into it, the domino that started all of this mess for Alibaba appears to be when Jack Ma at a conference spoke poorly about the Chinese government. And ever since then, Alibaba that is really the point at which the inflection point of the downtrend started. Now, when you look at their stock price on October 23rd, now this is on a weekly basis, so I'm not going to get all of the details. It was around an all-time high. And shortly after that statement by Jack Ma in early November, the Ant IPO was delayed. I want to say it was in the first few days, maybe 4 days of November. So within a little over a week, they had already punished him. That was supposed to be, I think, close to $300 million IPO, or valued the whole company, Ant Group, at over $300 million. And that was a huge thing for Alibaba as they owned 30% or somewhere around 30% of the business. Now, in that time frame, just between that October 24th and middle of November, you've already seen a 15% drop in their share price. Now, a month later, there's released an antitrust probe, and this was in early December of 2020, a probe into Alibaba's, antitrust probe into Alibaba. And then by December 24th, we've already seen a 28% decrease in Alibaba's stock price. Now, one thing about this antitrust probe, it lasted until April and it resulted in a $2.8 billion fine, which actually caused the stock price to do well, which we'll talk about a little later. Now, the next thing is in February of 2021, Jack Ma appeared. I can't remember what exactly the details was, but he did appear, and that was the first time he was seen since that conference. And the other two the Ant Group IPO was delayed, and the antitrust probe was announced. So this was at least some positive news. If we go back to February, you can see that the stock price had dipped. And in early February, when they saw him, the stock price bumped up a little bit, but then proceeded to drop back down going into April. So we'll go on to April next. In May, like I said, in April, that's when the $2.8 billion fine was announced, and there was a very slight, in the short term, there was like a 7% jump there in the stock price. Mind you, the stock price going from when this all started down to May, we are looking at April 30th, we're looking at down 25%. Okay, and in sometime in May, when earnings came out, they did say that they had I think in the April earnings release, they released that they had one large client that dropped out or backed out of their contract with Alibaba Cloud, and that was a reason for slower growth in that quarter. Later, we find out that was ByteDance, and they removed their non-Chinese business, so their international business, off of Alibaba Cloud. Now, sometime in the middle of 2021, it could have been a little bit before, it could have been a little bit after, I started hearing a lot more noise about VIE structures. That is typically how that is how Chinese companies are able to list their shares in the U.S. market. They create this VIE structure, which basically creates a shell company, and you were able to buy those shares on the U.S. markets, but you technically don't own the asset, which is Alibaba. Now, that has been going on since, Alibaba IPO'd. I looked at articles as old as 2017 talking about this fear. And again, I believe that's just one of those articles that you can just reprint and reprint and reprint. It doesn't mean the fear is invalid. It doesn't mean that there isn't any concern with VIE structures. But the Chinese government has addressed this pretty recently, I think in the last month or two, and said that they're not planning on getting rid of VIE structures or preventing new companies going forward to IPO with VIE structures. But, I'm not going to be mad if someone continues to say VIE structures are a risk. It's definitely it is a risk, but I think it's a very low risk. All right, so the next 5 events I'm going to share happen in pretty rapid succession, and the first being delisting fears. So delisting fears really came about when DD Global went public. They ignored some CCP guidelines, and eventually it resulted in their app being removed from the App Store, causing them to be feared of delisted from the U.S. Stock Exchange, which did eventually happen, and they are in the transition of moving it off U.S. exchanges into into the Chinese exchange, Hong Kong exchange. Now, with all that being said, that fear was stuck around for months. I don't think it has actually announced until November-ish timeframe, and that hung around for a long time and caused a lot of fear around Alibaba, and I think it was a legitimate fear. If we go ahead and pull up a stock price, you can see that back in July, this is the end of June, early July, we saw a 10% drop just in the first, week and a half of July, mainly due to this concern. And from there, we saw one of the steepest drops over the next few months of 36% between July, the end of June, and the beginning of October. So that brings us to Evergrande. Now, Evergrande is a real estate company, and they've been developing and developing and developing. And essentially what happened is they borrowed all this money. The housing economy in China is not that strong. There's a lot more supply than demand, and housing prices are going down. And this company, for example, was unable to pay its debts because it wasn't receiving any revenue for all this capital it had invested in real estate, and has continued to do so. Now, this was a really big concern. People were saying Evergrande was going to affect non-Chinese markets. I was a huge skeptic of that, and it turned out to be a big nothing burger. And it ended up being really nothing for the Chinese economy as well, in my opinion. But it did hang around from about, sometime in August. It did hang around for about a little over a month and a half. So it did hang over Alibaba for a period of time. Now, the next month, in September, Alibaba announced that it would be paying $15.5 billion to the Chinese government for a common prosperity fund. Now, most people probably consider this the cost of doing business in China. I call it, stealing from shareholders. Whether you can see this one way or another. You could also say that, it's like I said, cost of doing business, but pay your taxes, and you don't need to be donating money. You should be giving that back to shareholders, plain and simple. So I'll leave it at that. Next up, we got October. There were some power concerns. We had lots of blackouts in China, power outages. I think it was an energy crisis where they needed more energy, like coal, I believe it was. And that was causing issues with maybe manufacturing, going to cause supply issues, not going to be able to meet deliveries, so on and so forth. And that was going to have some global things, but it was mainly specific to China. And so that was not a huge issue, but it was I think a small thing relative to some of the others. And then the next thing that you started hearing around in October, I started hearing it first in October, was slowing growth in the Chinese economy. Now, again, you can see that again coming back up in early of 2022, but that is a concern. It's definitely something you should pay attention to. If we see that trend continue to grow and it becomes substantial, and we start to see it come to fruition, that could be a big problem for Alibaba. Now, just to go back, like I said, over the past 5 events, we saw a really big decline. Now, just to remind you, from that July of delisting fears, we're looking at to October, to the end of October. Now, the end of October started going up, and I think that's because Charlie Munger bought into the name. It was down about 27% or so by the end of October, early November. And that brings me to November of 2021. Now, on November 18th, Alibaba reported its earnings, its last quarter earnings. Its next quarter earnings are going to be sometime in February, in the next week or so, maybe 2 weeks. But they reported very weak earnings, in my opinion. They showed slow growth in their main market. They had slower expected growth in their cloud. They had, the big thing that drew the line for me was net income was down, free cash flow was down. They had substantially down, and they were pointing to all these investments, in my opinion, that came out of nowhere. And I did not like to see that. When you're looking at what Alibaba was bringing in the previous 4 quarters, or even some years prior after that, that write down, that decrease in free cash flow, in my opinion, was a huge hit and a serious cause for concern when stacked upon all the other things that happened throughout the rest of the year. VIE structure, delisting fears, Jack Ma disappearing, the antitrust, the common prosperity. I could overlook all that. The thing I couldn't overlook is I kept going back to the core of the business. The financials are solid. The financials are solid. Well, when they reported, the financials were not solid, in my opinion. It showed weakness. And I should say they were solid, but they showed weakness. And that was something I could not stand. At that point, I actually had, several $1,000s of losses. I went ahead and sold my position, and I rebought back in a month later, sometime around mid-December, so I could cash loss harvest my losses and offset the gains I had in 2021. So this was a really big catalyst for bringing the stock price down, and I'll just show you what happened. So again, like I said, Charlie Munger bought, his 13F was released on October 1st, and at the end of the month, you saw that just drop right off a cliff right after the November earnings. So I'm trying to get how much it went down after that. So in the 2 weeks after that, it had dropped another 30%. 30%, 2 weeks. 30%, 2 weeks. It was a big deal, and investors took it as a big deal. Now, the last 3 things are kind of happened in the last month. So in January, the U.S. government said that they would be reviewing Alibaba Cloud, and I believe any business that they were with Alibaba Cloud, they would be suspending. So that is a pretty big concern there. I think basically what that means is U.S. companies are going to have a pretty hard time using Alibaba Cloud across the board. It's kind of like Huawei. U.S. really does not use their devices, mainly because the U.S. government thinks, there are national security concerns, and I'll leave it at that. Moving on, another thing is interest rates globally look to be going up. At least I think that they will. I know the U.S. government is hinting at and is planning to increase interest rates. Sorry for all the fumbling there, in March. And so mainly the reason there is to combat high inflation, and that's pretty much happening globally. So I don't expect the Chinese government to let inflation run too hot. I think they will combat it with a little bit higher rates, but we'll see. Tech values drop. So across the board, high-tech companies have lost a lot of value in the last week and a half, 2 weeks. And again, it does affect Alibaba in the fact that if Amazon, if you're Apple, your Microsoft, these companies in the US that are, go-tos in times of bear markets are going down, you're probably going to see an outflow from Alibaba as well, because in addition to everything else that's going on with tech, you have all these other concerns. Again, like I've talked about, most of these concerns have been addressed. They temporary. The biggest concern out of all these things, every single thing that happened over the time, I think delisting was a legitimate fear. It was definitely a concern. There was a lot of tension between US and China, and the thing with Didi was concerning. But I think a lot of that fear was, offset by you can just move your shares over to Hong Kong, although not many people really would like to do that. But the main problem I saw was with the weak earnings in November of 2021. That was a huge issue, and they really do need to address that in the next quarter. And I'm very optimistic that they will. But if they do disappoint, we are going to see some massive problems with Alibaba if they disappoint in the next earnings. Yeah, that will be the catalyst to drop them into the, $90 range. I do not doubt if they do not do well in earnings, they will be at the $90 range in probably the next 3 to 4 months. Now, on the flip side to that, if they do well with earnings, I think that could be a catalyst to finally get them out of this slump. But again, they're going to have to deliver over several quarters. Now, not only is Alibaba going to have to be competing with impressing shareholders, around Alibaba specifically, there's a lot of macro issues, global issues that are occurring right now around inflation. We have concerns about possible, war with Ukraine. There's a lot of things going on right now that are not specific to Alibaba. And like I mentioned, with outflows in tech in the US, we're more likely to see outflows of tech in China as well. So some of those things are going to be bad timing if Alibaba does impress in their earnings report. I think that is going to be the biggest factor. And if they continue to do that over several quarters, I do think we can see Alibaba get back to 200 by the end of the year. I think even possibly higher, but we're going to need to get some of these things, some of these fears totally alleviated and people stop talking about it. Or they need to start talking about like Epstein or whatever it is, some crazy story, and get their mind off of Alibaba for a minute so investors can chill. But I hope you liked this video. I enjoyed putting the timeline together. I thought it was actually pretty cool, and informative, getting to look back on what had all happened to Alibaba over the last year, a little over a year. It's been a wild ride, just straight down, but it has been crazy, and Alibaba has gotten extremely beaten up and looks like an extreme value right now from value investors. So it's definitely something I'm going to be paying attention to, and I hope they do come out with strong earnings here in the next couple weeks. So thanks so much for watching. My name is Frank. If you like this type of content, I do videos on personal finance, investing, and stock analysis. Thank you so much for watching. Frank Finance.